Hey, what's up, guys? Thought I'd hop on and do a little market review for today because I have the time. I will also do a little market review tomorrow, a little update on the week because I believe tomorrow with the Fed rate announcement, we will see what this week is really going to shape up to be. Is going to be an up week or a down week, and hopefully the market will release itself from this consolidation. But in terms of today, the day before the rate announcement, thought I'd come on just because I'll be journaling. It's days like this where you write in your journal. It's good to see and kind of describe what price was like. So when you come back the following year, you can kind of look, get a little update, and just start to notice, you can start to map like a trend of this is how price usually behaves before CPI. This is how price usually behaves before FOMC. So I thought I'd come on here and kind of break it down with you guys. So the first thing I usually look at is 15-minute chart. Remember, the 15-minute is the bellwether. So up here in the 15-minute, you can see overnight these black lines just denote the day. So you can see overnight from yesterday went kind of sideways in a tight range, and this morning is when we had the CPI at 8:30. So 8:30 news driver. Then you can see on the 5-minute and on the 1-minute too, but on the 5-minute, 8:30 hits, we spike up. And what I'm going to do is I'm really just going to go over the context and the narrative of what happened today. So what happened was we spiked up, wiped out the buy side. And then what happens then? It seeked sell side. So spiked up, large wick on the 15-minute. You can see it on the 5-minute as well. And then we came rocketing down. So I know this is a tight range, but you can see it came down, then went for sell side liquidity. So it went for sell side liquidity. And on its way, we can watch, not really on the 5-minute, but on the 1-minute, you can see it's, respect PD arrays on its way to that. So 8:30, volatile. Then we moved down, came up, entered into this PD array, came down, and you can just see how the up close candles respect down close price. So this is what it should look like when we are running for liquidity and, just entering, in this case, a sell program. So up close candles, down, up, stop here, down, up, measure out where that stopped, wicked right over mean threshold of that body. So you can see it came up, didn't break above this high. Price is just delivering. Kind of paused for a moment, came up, didn't break above this high. And then we came and ran down here. So what's down here? What it was really doing is, if we go down to 15-minute, it's just clearing out all this sell side. So you can see this right here, sell side. Here's a sell side low from the previous day's PM session. It's coming down. Now, why did it stop right there? Well, let's scroll up to our higher time frame. Go to possibly the 4-hour. You can see it's really just stopping. It's kind of coming in. This on NASDAQ looks a lot better. But it's coming into this 4-hour inefficiency, stopping at these 3 consecutive down close candles. Stopping at this down close candle from the previous day's hourly, and then we take off to the upside. And that brings us into the 9:30 open. So for this channel in the 9:30 open, so I'll kind of break it down in the context of the models that we trade on this channel. So remember, you need a trading model, and a good thing for ICT is time-based models, so it makes you look for something specific at a specific time of the day. So it really narrows your focus in. And for me on this channel, during 9:30 to 10, we trade the 2022 model. Now, the 2022 model doesn't only happen between 9:30 and 10, but I like 9:30 to 10 because it's right at the market open. It frequently happens around that time, and it gives you, a 30-minute, very specific model before the silver bullet. So it kind of helps you relieve those nerves of, having to wait for this opening range. You have something that you can possibly trade, but since it's very, very specific, it doesn't always happen. So again, it's just opening our horizons a little more past the silver bullet, but still keeping it very, very tight. We look for something very specific, 2022 model, in a 30-minute window. So again, that's just me. I usually like to see a 15-minute, sweep of liquidity. We kind of got that here, but I didn't like it too much. I wasn't actually watching this market open today. On the 5-minute, we came down, and you could say we got a shift in structure here, but just the way it kind of came down and rolled up, wasn't something that I probably would have taken any trades on. So just kind of looking back in hindsight of price, I don't think anything in this swing would have constituted me to enter a trade off that model. Come into the 10 o'clock hour. So here on the 15-minute, we can see we finally came down. We really missed the new week opening gap. And again, just a note, I am now on the March contract for the futures indices, and I would suggest that you guys do the same. If you look at the volume, I'm sure I don't have to explain to you guys. I don't think I should have to explain to you guys the when to roll over a contract, but I think it's time to roll over. Coming into 10, we were going up, so we already wiped out sell side. Wiped out sell side on everything from the 1 minute to the 15-minute. No, stop. My apologies. Okay, and also on the above the 15, so the hourly, we're entering into efficiencies and order blocks. You can see where the body's closed. Body's closed inside of this hourly BISI, showing respect of it. And then coming into 10, with an aggressive run up like this, when you see it drop like this, there's also really no efficiency in here besides this right here, but there's not much of an efficiency in here. So I wouldn't, when on this retrace up, there's nothing where I would have been like, oh, okay, let's enter short to go lower. You can just tell we swept buy side, came down, swept so much sell side, closed this candle inside of this hourly BISI, and then we kind of came up to just this market structure. It didn't leave any room for inefficiency. So it rolled up just as similarly as it rolled down. So based off of this would have just been a very much like a wait and see thing for me. Came up 10. Okay, 10 o'clock, we're looking for silver bullets. So we swept buy side, came down, swept sell side. Even though we haven't really had a strong market structure shift on the 5-minute, I would have probably thought to myself, it wants to go up. It wants to go up. Again, we're still kind of climbing upwards because we have on the higher time frames, the 4-hour and the daily, we have these highs, and we're just working our way inside of this efficiency. So I did say on the weekly forecast I was kind of expecting a down week off of CPI, but or not a CPI, off of the Fed rate, but Fed rate hasn't come out yet, so I think we're still just working our way up. Again, after watching today, it can really go either way, so there's a good chance that I'm wrong and we don't go down. We could go straight up and just take these highs, but I'm not going to get into that too much. So I would expect, based off of this price structure, I would be looking for higher prices just because we're in this daily, this yellow, we're in this daily range. So we're going to work the inefficiency. So we're coming back up. Had a decent size movement right here that left fair value gap. You can see we came down and we institutional order flow entry drilled it. But if you had a limit order there, you probably wouldn't have got knocked in. We can see the dollar going down. So we have the dollar going down. We swept out a decent amount of sell side, turned around inside of a higher time frame and efficiency. So these are all things that are lining up to think buy side. We're going back up. So dollar going down, tapped into it, moved away. So really, this was kind of the first example of when you should have said, we're definitely delivering buy side of the curve right here, because we came all the way up on this pullback. We had this pullback, came up, and then these candle bodies you can see are respecting these 3 consecutive down close candles. So we're showing signs that the algorithm is in a buy program already. We have these down close candles. Respect it. Break above these equal highs. This down close candle respects that one. And then we have displacement. Come up, come down. IOFED'd into that. Came back up. Now, let's go under the assumption that you wouldn't have got in here on a limit. So we still haven't got in, and we're going up. Finally, right around here, we market structure shift on the 5-minute. See us market structure shift on the 5-minute. So this red line, which is the sell side that I denoted about the London range, but you can see I'm just going to use it for this example. See how this 5-minute swing high right here lines up perfectly with it. So let's follow it across. When on the 1-minute do we close a body above that 5-minute swing high? In this price leg right here. So you can see us wick above it, don't close a body above it, but then right here we break above it and close candles above it. Starting here with these up close candles, we can see displacement. So this right here, I would say I'd be interested in entering off this fair value gap. We haven't really got much of a fair value gap, see these little ones right here. I guess if you entered off that little one, put your stop below this down close candle, you might have gotten stopped out on that touch. It came down pretty nicely, pretty evenly. But again, let's be realistic. We're not trying to cherry pick. We're trying to, when we're back testing, pick things that we would have picked off the chart. So something that I think is cherry picked is, calling out this little fair value gap and pretending like we would have, entered on it and rode it up. Something that is a little less cherry picked in this back testing. Of course, we're back testing, so everything is in hindsight. But this fair value gap. Why this fair value gap? Because I just kind of broke it down to you. We have the dropping dollar. We're working our way inside of this inefficiency. We knocked out a bunch of sell side. We turned around on the hourly inside of this hourly BISI. We shifted right here. I think the biggest thing for me would have been the fact that on this run up from this swing low to this high with this displacement this is the run that shifted the market structure for that 5-minute high. Right there, 1035 to 1040. So came back, entered on that. You'd have your stop. You could have it below this candle. Came down pretty evenly. Best place probably would have been below this swing low. Why this swing low? Because this swing low already swept. Now, remember, price is fractal. So on these lower sub 1 minute time frames, this swing low swept sell side on these, kind of cleared out the sell side on these swing lows. Swing low right there, swing low right there. Price came down, swept it, and that's when it delivered higher. So you could put it below here. You might have gotten stopped out because it made it equal low, but a very reasonable thing would have been to keep it down here. Then we moved higher. And then that's when we delivered, I would have called that the silver bullet. We delivered at least 5 handles. Let's see it right over here. Then we came into the 1050 macro time, and again, line it up with what ICT says for time and price. So you entered off this right at the 1050 time. Beautiful. And delivered 5 handles. And you can see kind of came, consolidated, moved sideways a little bit, respecting this fair value gap pretty nicely. But let's look at the 1150 macro. 1150 macro to 10. So 1150 macro drops down, wipes out the sell side into this sideways accumulation, enters back into that same fair value gap that we saw, and then really takes off. Then we have lunch hour coming. Let's see what NQ did at the same time. Very similar. So you can see we have the little bit of a SMT, this swing low right here. NASDAQ came below it, ES didn't, and then that would have signaled you that it wasn't truly a market structure shift. It was a raid on liquidity, and then it bounced higher off of that. Then going into the rest of lunch, we kind of moved our way up, come 2 o'clock. So second silver bullet window. And again, guys, this is really why, I said it in the weekly forecast. I'm saying it again. I'm not trading right now. I'm taking the winter break, and it's because price movement like this. So what I'll do in my journal is I'll say, price delivered X, Y, and Z at 8:30. Nothing into 9:30 in the 10 o'clock hour. I'll probably do a snippet of the kind of the morning session and just say 10 o'clock hour, price delivered a silver bullet, specifically off the 1050 at the 1050 macro on the 5-minute market structure shift. And I'll take a picture, and what I'll do is I'll full screen this and take a screenshot of that whole morning session. And then I'll say in my journal, nothing happened in the 2 p.m. silver bullet. So again, this is one of the reasons why it would be smart to be dialing back the amount of trades you're taking, because look, this isn't great. Price, you can see right here what it did is it came back down to kind of take out a low before going higher, but then it just kind of barcoded its way up. So I don't think there's really much in here that would be smart to say you took a trade on. In hindsight, you could kind of say, you could call out this market structure shift and enter on. You can make an argument. You could enter on that and say that was our 2 p.m. silver bullet. I think that's a little cherry picked in my opinion, but hey, who knows? But anyways, I think a lot of people would agree and see this and be like, I wouldn't have taken a trade in that. I think a lot of traders would agree that this isn't price that is very high probability of delivering for the concepts we're trading. You can see on the 5-minute, we had the down close candles. So from this high, we had the down close candles, and then finally it shifted. Similar, it's a very similar idea to what I just described in the 10 a.m. silver bullet. So when the price leg that finally closed a 1-minute candle, but shifted structure on the 5-minute, was right here. So right here is when we finally, well, I guess that didn't even close the candle. The next candle is what closed the candle. And then we retraced into that fair value gap that formed as we were shifting structure for the 5-minute swing high, and retraced, entered it right there. And then we took off into the PM session. And again, I think, most of you can probably understand if you looked at the markets for a little bit that the way these bars are printing, just not ideal. Again, remember, time of the year, not the best time of the year for price. Take a quick look at NASDAQ. I think NASDAQ really delivered very similarly. I'm not going to get too much into the fine details like I just did with ES. Just know, it was the same basic concept off the 8:30 news. We swept the London high, went for sell side, came down, rallied off. We had a dropping dollar. You can see right here, again, this yellow line in the background is the dollar. But you can see right here, we came down, respected this fair value gap, rallied up, respected that little fair value gap right there, rallying. Moved sideways a little bit, but as you can see here, once we came up above, broke this high, came down, came up, swept that high again, and if we're looking on a fractal time basis, price came down here and placed an equal, it looks like it was a little bit higher price. It couldn't come back down and sweep lows, so it had a energetic price move up, creating a fair value gap. And you can see right here, we had a lot of candles that really just respected that bodies all respecting above the consequent encroachment. And then that delivered to the upside, same macro time, 10:50 to 11:10. Very similar to ES. PM session. Also very similar. Don't have that fair value gap entry that we spoke of really on NASDAQ, but again, this is hindsight where you can, it's best to say it's a good thing that we didn't take or enter any trade here. And again, it is very wise to be dialing back and taking less setups in the market. Don't feel like you need to, like, oh, I didn't take a trade today, I must not, don't let that devalue you as a trader. If anything, the fact that you didn't take a trade probably means you were flexing more discipline. Again, so we have the Fed rate tomorrow. Trying to find the time for that. Fed rate tomorrow. Oh, I'm on it at 2. So 8:30 news, 2 Fed rate. I'll do another weekly update video after market close tomorrow.